Hi, in this video, we're going to try and talk about careers in equity research. What exactly do we mean by equity research? What are some of the segments of equity research? And how does one build a successful career in equity research? So let's try and understand first, what do you mean by equity research? Equity, as we know, stands for stocks. So anybody who's doing research on stocks which are publicly listed is going to be called an equity research analyst. There are typically two segments of the equity research industry, something called as buy side and something called as sell side. Let's try and understand what these buy side and sell side terms mean. The names buy side and sell side appear to be some kind of misnomers, in the sense that a lot of people get confused with the idea that, buy and sell means with respect to the stocks that we are talking about. That's not the case. The sell side here refers to an entity that is essentially giving out research in order to sell their broking platform. Right? So this is all the brokerages that we find which come out with those research reports that say buy, sell, hold, outperform, underperform. All of those broking platforms are essentially the sell side entities. The buy side, on the other hand, are all the funds which are essentially transacting on these securities. Right? They might be using this advice, but these are the fund managers who are essentially buying and selling securities, who are taking the actual investment decision on any stock. Right? So that's the segregation between sell side and buy side. The sell side would be people who would do research. These could have, in terms of their customers, institutional as well as retail customers. If the customer is institutional, like for example a mutual fund or a foreign institutional investor, the customer for the sell side entity would be the buy side entity. Right? You could also have high net worth individuals who could be your customers, in which case you could be providing research on stocks to them. The buy side, on the other hand, as we discussed, are all the mutual funds. You could also have portfolio management services. You could have alternative investment funds, AIFs, PMS, who would essentially be the fund management segment, who would be taking actions on individual stocks, trying to create a portfolio, selling those portfolio management services to investors eventually. Right? So that's the segregation. Some examples here, if you look at some of the sell side entities, you will have all these broking firms whose names are there, like Kotak Securities or Motilal Oswal, in terms of some of the Indian domestic broking outfits that are there. And then you would have foreign outfits such as, JP Morgan, who would basically give out research on Indian stocks in India. On the buy side, you would have these ICICI Prudential Mutual Fund, you would have Kotak Mutual Fund, you will have other mutual funds, PMSs, AIFs. There are about 50 mutual funds in India. Life insurance entities who are also investing in equity markets would also kind of form the part of buy side. Any kind of PMS or AIF, which are sort of specialized investment schemes that are available for more specific kind of high net worth individuals or investors who are there, these are also sort of under the purview of buy side. Right? So let's try and understand the equation here in terms of how does the buy side and sell side interact with each other. The sell side essentially would be doing research on a particular stock. Let's take, for example, we're looking at a stock of something like Infosys. So a sell side entity would essentially come out with a research report on Infosys saying that, whether they like the stock, don't like the stock, what are the, rationale behind investing, what are the risk factors that are there. This research report is given to the buy side entity. Now it's assumed that the buy side is going to obviously transact. If they are going to transact on the share of Infosys, they're going to need some brokers. Usually, because these are large mutual funds, the volume of transaction is large. Let's say somebody has to buy 10 lakh shares of Infosys. They will need multiple brokers. उनको कई brokers चाहिएंगे, right? How do they choose the brokers? Brokers could be chosen on execution capability, but at that stage, in terms of the market, everybody is seeing the same stock, so that may not really differ too much. Brokers could be chosen on the basis of cost, but again, the whole idea being that it's a commoditized business, so eventually on cost everybody will match. Brokers could be chosen on account of the quality of research that is coming out. That's what most of the sell side entities try to endeavor. Essentially, their idea is to give cutting edge research so that the buy side kind of goes and uses that research and then transacts on their platform. So that's the construct of how does the buy side and sell side interact with each other. Now think about what kind of skills would be needed in this particular industry. If you're looking at, broadly from the perspective of buy side and sell side, while I'll come to individual, specific differences between the two entities, broad category of skills that are needed would remain similar for both segments, right? Buy side and sell side. So think about what kind of skills would be needed. There are two problems you have to try and answer here. The first problem you have to solve is what do you research? And the second problem is how to research. What to research is the concept of ideation. How do I basically research which sector should I track? Which company should I track in that sector? Is there any macroeconomic parameter that is giving me some idea about, how the economy is shaping up? What to research is an ideation problem that is coming from there. How to research is the concept around building a valuation exercise, right? So if you think about the skills that are needed, they would be segregated into these two questions. For a top-down analysis, to understand what opportunities or ideas exist, a macro perspective is extremely necessary, right? If inflation is going up, what's happening? If commodity prices are going up, what's happening? If interest rates are going up or going down, what sectors will do well? For example, if rates are going up, you would assume that rate-sensitive sectors like real estate and autos may not do well. So that understanding of what sectors would you want to approach and research on would come out of this macro perspective essentially. The second part that would come in this exercise is the analysis of the company. Now here you would have to look at both the history of the company in terms of the analysis, right? And you would look at the future of the company as well. And when you're looking at the company's analysis in historical terms, you are looking at essentially financial statement analysis as the core skill set that you're looking at. So financial statement analysis. To understand about the company and its future, you will also need to decode the industry. There are frameworks that are available for analysis of industry, like the Porter's 5 forces. You would have to understand what's the industry structure. Is it a monopoly? Is it an oligopoly? Is it a duopoly? Is it a perfect competition? How much is unorganized as a part of the overall industry? What is the behavior of the players in the industry? All of this has to be kind of decoded in order for you to have a good understanding of what's going to be the future of the company. Then comes the actual valuation exercise, where you will need a very strong conceptual understanding of valuation methodologies, which is, would you use discounted cash flows, relative valuations, replacement cost method, something else. And in addition, you will have to have an understanding of tools such as Excel to be able to build those valuation models. So you'll need financial modeling skills as well if you're trying to build a career in equity valuation. Goes without saying that you also need an understanding of the equity markets. How do markets perform? How do investors behave or traders behave in the market? What kind of impact does that have on stock prices is also a skill that you have to develop over a period of time, especially if you're on the buy side, because then you are trading on those stocks or investing in those stocks. So at any given point of time, investor behavior becomes an important aspect of your understanding as well. These are the core skills. The skills in this segment are non-negotiable. Why do I say that? Is because this is a very hotly contested area. There aren't too many jobs in this area. There are enough jobs, but there are not too many jobs, and a lot of people are vying for these jobs. This is one of the most coveted segments of financial services in terms of career building. So if you are trying to build a career in this area, it is absolutely important that you pay attention to adding all these skill sets to your profile. You will have to have a good perspective right from the economic environment all the way down to understanding the industry, the company, and valuation methodologies, and a very good understanding of how do you go about building a financial model if you would like to build a career in equity valuation. That's broadly it from me in this particular video. Thank you.